Welcome to the deep dive. If you're tuned in, you're probably curious. And today we're taking a closer look at investing in commercial real estate, specifically in Bangkok.
That's right. We've been digging into some insights shared by Ocean Worldwide. They're a luxury real estate agency actually based down in Phuket, been there since 2004. So they have a really solid on-the-ground perspective.
Yeah, loads of experience. So think of this as, your quick guide to figuring out if Bangkok's commercial property scene might be a good fit for you.
Exactly. And Bangkok, well, it's got this really interesting mix, doesn't it? A vibrant economy, great location in Southeast Asia. It pulls in investors from all over, local and international.
For sure. What we want to do today is pull out the key nuggets from what Ocean Worldwide shared, just to help you understand the potential without getting totally overwhelmed. So where do they start? First key thing.
Location. Always location, 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 right? Especially in a massive city like Bangkok. They really hammer home that it's not just about a good area, but the right area for what you specifically want to do, business-wise or investment-wise.
Okay, so what makes it the right area then, according to them?
Well, things like accessibility are key. How easy is it for people, customers, staff, whoever, to actually get there?
Right. And visibility. Can people see your business easily?
Precisely. And the whole surrounding environment. Do the nearby businesses, the amenities, do they actually help your venture or hinder it?
They had a really clear way of putting it, didn't they? Something like,
Yeah, you can have the fanciest building, but if it's in the wrong spot, you're going to struggle.
exactly. Hits the nail on the head.
Yeah.
So you really need to understand the different districts, yeah? Things like traffic, public transport links, the BTS, the MRT are huge.
Absolutely. And what other businesses are already there? Are they complementary? Competitors? It all feeds in. This kind of deep dive into the districts is crucial.
So Ocean Worldwide actually points out some specific key districts for commercial investment. Where do they start?
They kick off with Sukhumvit. What's their take on that?
Well, they flag it as super popular, lots of expats, lots of tourists. So you get this mix of retail, office spaces, even residential.
Higher prices, maybe.
Yeah, potentially higher prices, but they say the rental demand is really strong and consistent.
Okay, makes sense. What's next?
Then there's Sathorn. They peg that as the main central business district.
Ah, the CBD. So big companies, fancy hotels.
Exactly. Think multinational corporations, high-end hotels. They say it's ideal if you're looking at office spaces or, luxury retail.
Got it. And Siloam.
Siloam's interesting, more historic, they say.
Yeah.
Still commercial, office buildings, but also like street markets, entertainment, a bit more of a traditional vibe, perhaps.
Sounds like it. A different feel to Sathorn.
Definitely. And the last one they highlight is Rama 9.
Right. That's seen as more of an emerging area, isn't it?
Yeah, an emerging business district, lots of modern office towers going up, big shopping malls, new residential stuff too. They suggest it's got good growth potential.
So a range of options. But the key message from Ocean Worldwide seems to be,
It really depends on who you're targeting, what your business model is. You've got to do the research, maybe talk to local experts.
sound advice. And that leads nicely into the next point they make, which is about the factors that actually drive property values in Bangkok. What tops the list?
No surprise here, being close to the BTS.
It's all connected, isn't it? These factors don't exist in a vacuum. Okay, so moving on. Ocean Worldwide talks about current market trends and economic signs. Tourism's a big one.
Huge for Bangkok. They point out that tourism recovering is giving a real boost to hotels and shops.
Makes sense. And Thailand's also trying to pull in foreign investment in specific sectors, right? Like tech.
Yeah, tech, healthcare, green energy. That's driving demand for different kinds of spaces, like offices and maybe even factories or labs.
Interesting. And we're seeing more mixed-use developments, too.
Places that combine, like shops, offices, and apartments all in one spot, creates more of a mini community feel.
And foreign direct investment, FDI, that's playing a big role, too, driven by shifts in global trade and interest in specific things.
Yeah, logistics, industrial sites, data centers are apparently hot areas. And hotels, of course, which is obviously relevant given Ocean Worldwide's base in Phuket.
Right. They also mentioned manufacturers looking at Southeast Asia generally, and Thailand being well-positioned.
And there was that specific point about the Board of Investment, the BOI.
Ah, yes, the incentives. They mentioned that the BOI has promotions, allowing foreign investors to actually own freehold land for certain things.
Like hotels, data centers, industrial estates. That seems like quite a big deal.
It definitely can be. It signals that the government is actively trying to attract specific types of investment. They also touch on broader trends, like governments across the region creating business-friendly rules.
And the growing focus on sustainability, green buildings.
Exactly. That's becoming a bigger factor for investors. Plus, things like government policies on land use, taxes, foreign ownership rules, they all matter. And of course, those big infrastructure projects we mentioned.
It all shapes the investment landscape. Which brings us back to tourism, actually. Ocean Worldwide really emphasizes how vital it is for Bangkok.
Can't overstate it, can you? It's consistently one of the world's top tourist cities. And that directly feeds the commercial property market.
Yeah, they specifically say the rebound is great news for hospitality and retail. Obvious links there.
And it's not just hotels. It's guest houses, short-term rentals like Airbnb, retail spaces in tourist hotspots. All that demand pushes up property values in those key areas.
Ocean Worldwide points to opportunities in things like boutique hotels or serviced apartments for longer stays, maybe even upscale resorts, though perhaps more relevant for their Phuket base. And they mention that BOI incentive again for foreign hotel investors.
What about short-term rentals then? The whole Airbnb thing?
They acknowledge it, potentially higher yields, more flexibility for the owner. There's strong demand.
But there are downsides too.
Yeah, they caution about inconsistent income sometimes, it needing more hands-on management, and the rules around it can change, so it's a trade-off.
Potential reward versus potential hassle and uncertainty. Okay, let's shift to the rental market overall. Ocean Worldwide sees strong growth there.
Yeah, across different types of commercial property, they say rental rates are generally climbing.
And why is that? Just more demand.
Pretty much. More expats coming in, young professionals moving to the city, plus that constant flow of tourists we talked about. And in some prime spots, the supply of good space is limited.
Right. And the quality matters too. Newer buildings get higher rents.
That's what they observe. Renovated or new properties command a premium, something for investors to think about.
So what types of properties are in high demand right now for rentals?
They list office spaces, especially central ones near transport links, retail units in places with lots of people walking by, serviced apartments again, and interestingly, warehouses and logistics centers, probably thanks to e-commerce booming.
Makes sense. Any longer-term trends they see in the rental market?
The rise of co-working spaces is changing things for traditional offices, more interest in sustainable, green buildings, and those infrastructure projects opening up new areas are boosting rents there too.
So the overall picture for rentals looks pretty positive, according to them. Continued growth expected.
Yeah, driven by urbanization, the economy growing, and tourism staying strong, that seems to be the takeaway.
Okay, good. Now, one thing about Bangkok is the sheer variety of property available, right? Ocean Worldwide touches on this.
They do. They make the point that whether you have a smaller budget or, serious capital, there are likely options. It's not just one price point.
That's important for listeners to know. It's not necessarily out of reach. What kinds of properties do they list?
The main categories: office spaces, retail units, warehouses and industrial properties, hotels and service departments, and also those classic Thai shop houses.
All right, the ones that often combine a shop downstairs with living space upstairs. And they even suggest strategies based on budget.
Yeah, just as examples, like smaller budget, maybe look at a small retail unit in an area that's still developing, or perhaps REITs, real estate investment trusts.
Okay, and medium budget.
Maybe office space outside the absolute prime CBD, or perhaps a shop house you could rent out.
And for the big investors.
Then you're looking at prime office buildings, maybe luxury hotels, large shopping centers, that sort of thing.
But whatever the budget, the advice is consistent.
Research, research, research. Talk to local experts. Do your due diligence. They really stress that this is a long-term game.
Absolutely crucial. You don't want to jump in blind. Now, one of the big draws they highlight is the potential for high rental yields compared to other big Asian cities.
Right. They specifically name-check Singapore and Hong Kong, saying Bangkok often looks more attractive because property prices might be lower, but rental demand is still strong.
So, better returns possible. Do they give any examples?
Yeah, they throw out some figures like potentially up to 8% yield on a luxury condo, or maybe around 6% for a one-bedroom in a prime spot. Just examples, of course.
Still, those are appealing numbers.
Mm-hmm.
And the reasons behind these potentially high yields are, well, the things we've already discussed.
Pretty much. Thriving tourism, lots of expats, the growing economy, and property just being, relatively speaking, more affordable to buy in the first place.
But again, the caveat is,
do your homework. Get professional advice, maximize your chances of getting those returns, and minimize the risks.
They even included some case studies, didn't they? Like a successful retail space investment.
Yeah, one with a long lease to a known brand, and another about a service department building with really high occupancy. Helps to see real examples.
It does make it more concrete.
Mm.
But of course, there are always risks. Ocean Worldwide addresses risk management too,
Right.
right?
Yes, definitely. It's not all sunshine and high yields. They talk about common risks you need to be aware of.
Such as,
Market swings, if the economy slows down. Maintenance costs, especially with older buildings, can bite. Tenant problems, vacancies, finding new tenants, dealing with issues.
and regulatory changes. Laws impacting property owners.
That too. So how do you manage these risks? They suggest a few things.
Like diversification. Don't put all your eggs in one basket.
Exactly. Maybe different property types or areas, getting good property insurance, maybe hiring a professional property management company to handle the day-to-day.
Thinking long-term seems key as well, considering future developments or even if a property could be converted later on.
Right. And they really emphasize doing a feasibility study before you buy.
What's the main benefit of that? Understanding the potential return.
Yeah, understanding the demand, what it's likely to cost, and what returns you could realistically expect. It's like checking if the numbers actually add up before you commit.
Like a business plan for the property. Smart.
Okay.
Okay, let's talk about the bigger picture again of the growing economy and all the infrastructure development happening.
Which we've touched on, but it's a major positive driver. Economic growth plus better infrastructure generally leads to property values going up, capital growth. And having lots of multinational companies setting up shop helps too.
And those specific infrastructure projects, the BTS and MRT getting extended, new highways, upgrades at Suvarnabhumi Airport, they all improve connectivity, don't they?
Massively. Makes the city easier to get around, and crucially, it opens up new areas for commercial development that maybe weren't practical before.
So better transport literally creates new opportunities. And the overall impact on commercial real estate is,
More demand for offices, potential for higher rental yields, growth in retail and hospitality. It feeds into everything. They even mentioned that Thailand's property investment market showed resilience in 2024.
okay, nearly there. The final crucial piece is the legal side of things. The regulatory environment. Ocean Worldwide stresses this is vital to understand.
Absolutely paramount, especially if you're investing from overseas. You need to know the rules. They mention key laws like the Land Code Act, the Condominium Act.
And the big one, foreign ownership rules. What's the deal there?
Generally, foreigners can't directly own land in Thailand. That's the main restriction.
But there are ways to invest.
Yes, common approaches are leasehold agreements, typically for 30 years, maybe with options to renew. Or setting up a Thai limited company, which can then own property, but that has its own set of rules you need to follow carefully.
Right, and they made a specific point about renting out condos daily.
Yeah, crucially, they state that daily rentals of condo units, like short-term Airbnb-style lets in a condo building, are actually illegal under Thai law. That's a really important distinction.
Definitely need to know info. What about the buying process itself?
Standard steps, really. Due diligence is first checking the title deed, making sure everything's legitimate, then signing a sale and purchase agreement, and finally, registering the sale at the land department.
And their strong recommendation is,
Get a good lawyer, someone who knows Thai property law inside out, and understand the land and building tax implications, too.
professional advice is non-negotiable, basically. Navigating the legal stuff, finding genuine opportunities. You need local expertise. They even point towards a website for more legal info.
Yes, they do suggest resources for getting more detailed guidance.
Okay, so wrapping this up, looking at everything Ocean Worldwide laid out, drawing on their deep experience in places like Phuket and the broader Thai market. The takeaway seems to be that Bangkok commercial real estate can be a really promising area.
Yeah, that's the feeling. Driven by that growing economy, strong tourism, and quite a diverse range of properties available.
But you absolutely have to be aware of the risks. Market changes, maintenance, legal complexities.
And the need for thorough research is paramount. Location, market trends, the specific challenges. You can't skip that homework.
So for you listening, maybe the big question coming out of this deep dive is, if you were to invest in Bangkok commercial property, what specific type of investment, an office, a shop, something else, might actually align best with your own goals and how much risk you're comfortable taking on?
Exactly. It's clearly a dynamic market, and hopefully this gives you a much better starting point for deciding if it warrants a closer look for you.